Hey, it's Matt with PriceActionTradingSystem.com, and it's Thursday. It's April 16th. This will be our chart lesson for the day, and it's kind of ironic that we got a day like we got today after the day I showed you yesterday. Um, so this is totally in. Uh, this is totally the opposite kind of day that we had yesterday because this is a range day, and so it's kind of ironic that we got a day like today, but it's a good learning opportunity because I showed you how easy it was to find the trend lines and how easy it was to find the key entry points on a trend day. Well, on a day like this, it's so much harder. And there's not a lot of, and early on, there were not a lot of trades. So really, remember on range days, where are your key entry points? The support and the resistance. Anything in the middle is more suspect. Of course, you can get trends that that run through the middle. And if you got a good trend line and you get a good setup off a trend line, then by all means take it. But it's much, much harder. So, and you're going to get more failures in there. So it's not as simple as it was yesterday. It's totally different. And that's where people get really, uh, and that's what's, when I say that it was kind of ironic that we got the day we did today, because everybody was thinking about find the trend line, find the key entry points, hit them, and I should make winners. And then that didn't happen for them. And they're scratching their head like, what the heck? I thought this was easy. I thought you showed me how easy it was to find the key entry point and find the entries. Well, today's a totally different kind of day. And the learning point from that is that's why it takes so long to learn this, because just when you get one aspect of it down, the market changes gears a little bit and you get a range day like this that's totally different. And tomorrow we could get another range day that's real tight and trades totally set opposite as this one, because you're sure things are going to be off the highs and off the lows. And our lows were not consistent early on. We did get another consistent touch here, which made it a little easier. You really didn't have any consistent touches off the top because this one came up shorter than the last couple and higher than these. So you only got one real opportunity to go short up here. So where it really counts, you didn't get a lot of trades. And where you got to really be concerned um, is in the middle of all that. Even though you get trends, if you do get a good setup, but you'll see on I don't get many setups off the trend lines either. This thing, man, just took off like a rocket. You didn't really have much chance to enter it at all. And then this one, we never did come back to the trend line until we got a break, so not much chance on it. There's a few I marked green on the way down here. Uh, so this was just a difficult day. So if you had trouble today, don't worry, because there's not a lot of trades here. And it's totally in contrast to what we talked about yesterday. It's so much harder than finding an easy trend that just that's real simple with lots of pullbacks to the trend line that's set up perfectly. We didn't get that today. Early on, I was looking at this brown channel. I do believe it's correct. We did come back to confirm it right here, and it looked like it was going to confirm, and then prices shot on through. We still came all the way back down and tried to make a new low after the break, but it doesn't really matter actually, um, because the range really took precedent. So you can see those met in the same place, and even here it met on the midline. And we even got a little resistance coming back, and look how we even came back and tested it right here, which created this trend line going up. So I still believe that to be correct, but it just didn't really help you. So, but you had to, we had to pay attention to it early on because that might have been the trend that we're playing. So, but in the end, I think you're better off to just take it off and play the shorter term trends back up and down once you see that it's going to be a range and that's going to be the dominant pattern. So I hope that's clear. I'm going to back out. We're going to talk about the trades, and there's a few things we may talk about along the way. I've got a couple of notes over here, but I had a lot of email. I mean, I've had a long day answering emails because there were a lot of emails of people really struggling. And and so some of these I'll show you, and we can talk about them and go from there. But I'm going to back on out. Early on, we had this trend that ran up, and we were coming down here. So at 7 o'clock came, we were working in this two-tiered channel, and that's very clear. Hopefully you can see that one. The only problem is it pretty much ended right at the 7 o'clock hours we're coming in, as I'm coming in, so you really didn't get much setup off of it. But I'm going to make this bigger because people complain they can't see the bars, so try to make it as big as I can. I've shown you the big picture, but you got to dig down into this and find your shorter term, more micro trends is what you have to do. And you can see how clean that trend is right there. And notice slight difference. I didn't go from the very top, but that's because it didn't fit as well there. You drag it up there, it just doesn't fit as well. So I moved it toward, but you can see clearly how prices fit in there. But even if you'd have drawn this off the very high, you wouldn't have been off. You might have had a little break here a little bit earlier, but you can see how it doesn't fit very nicely on the bottom. So it tells you it's not right. The whole idea is that you want prices when they come back to the trend line to turn down, and when they come to the trend channel line to turn up. And look how perfectly that price action fits in there. You can see that midline working in the middle. Always remember that the midline is not as reliable. When prices come down from here, they're going to try to go back to here. Sometimes they won't have enough, they won't make it. Like here, we came back to the bottom again before we went up. So these are less reliable if you're trying to go short. Of course, that's not a very good setup there, but I guarantee you somebody probably had a bearish bar there. It still would have worked, but you would have seen where you would have had to exit. But sometimes you'll get one there that fails. And like here's one right here. Notice that you got a new low, first entry, and there's a second entry, and that's not even a bad signal bar. And somebody will go short right there, and then it'll fail, and they'll say, well, what the heck happened? There's a second entry short. Why did it fail? Well, prices are headed trying to get back to here. They struggled to do it, but they did. So you might have gotten stopped out there. So you can't just take second entries. If you just, I've shown you circled them a bunch of times, and somebody sent me one of those back today. What I was doing was just circling, for probably a week or two there. All I did was circle second entries with good signal bars. I wasn't necessarily circling trades you want to take because I wasn't talking any about the context or anything. I was just circling the trades. Well, somebody took a few trades that looked like some of those. They sent me their chart and they're scratching their head why their trades are failing. And then they sent my chart back and says, well, here, you were circling them here, but you got to understand, I was just circling second entries. Now, I know I said that, but I know people don't always hear what I say either. So they miss parts of it. They're not paying attention, or they were thinking about something else when I said it. So people miss a lot of what I say, and that's the reason I say a lot of the same things over multiple times, over and over and over, because eventually you'd be surprised how many times somebody will write me and says, I know I heard you say that a million times and it never clicked until today for whatever reason. Don't ask me, I don't know, but I say these things and they don't always click. But just remember that your midline is not as reliable because it's in the middle of the pattern. It's just like being in a range. All this slanted channel is a range that works at an angle. It's no difference than if the ranges that go sideways that have a horizontal support and resistance. Once you get in the middle, it tends to fail more often. So keep that in mind. And you actually have little trend lines, micro trends that you can draw to help so you know, and you kind of know when the trend's ending. So draw those as well. But the key is once it hits down here, it's probably going to reverse and it's going to try to go back up here. It might not, but that's what prices are going to try to do. So your best entries are going to be up here, not in the middle or not somewhere in between there. So I hope that's helpful. But 7 o'clock came right in here, and there was a second entry short right here. Notice I made it green. It's not a perfect signal bar. It is off the midline. It is off the EMA. We're working down. And if you look here, there is a little bit of a trend working down. And I would probably say you look like you might have a close, but that's probably the first convincing close. So it'll probably go test the low again, try to make a new low, which it does. So if you want to be aggressive, there's your trade, but it's not a very good one. And notice what happens. It rockets up out of here. And then we just kind of go in this little range right here. If you look at the far right, before you know that's a range, right now it doesn't really look like a range. But prices are working down. You get a first entry long, and then you get a second entry long. But we're just coming off the highs. How many times have we turned down up here? This is looking like a range day. And we keep turning down from up here. And so now you got a failed second entry long, which is not a good long setup. Look how neutral that bar is. So you don't want to go long there. And when it fails, you're probably going to trap trader. So when that bar closes, I'd probably put a sell stop right there. And notice that all you would have gotten was a scalp. Nothing more than that. So even that was not a great setup. But it is a failed second entry long. It is right off a key entry point. And it doesn't really look like a range, like we're going sideways, but you can see we end up going sideways. And you never really get a short or a long off this one. Notice that you finally get one bar here, but it's too bullish. This one's fairly bearish, but it's like a it's like a third entry. And it's an inside bar after you got several stacked up there. Just not a real good entry. And so you're just not getting many entries. And then finally you get a first entry, second entry. Notice that you would have measured that and looked for a possible measured move on that little range. And we kind of got that little failed breakthrough. And then there's two legs up. So that's a second entry short, but it's right in the middle again. So it's not a great place to enter really. You got this possible trend line working up here as well. And notice what happens. You get a break and it does come back up and make the new high before it goes lower. So we actually bounce at that support again. So it looks like we're going to stay in the range. It ends up breaking and going lower. But again, I marked that one green, but that's not a great trade. And several people sent me, I got at least 2, maybe 3 emails a day with people taking similar trades to this and it failing. And this is why, because we're not in a good trend. We're not in a strong trend. And you can see the range right there. But if you don't draw these lines on there, you won't see this stuff. So this is just still in the range. It still would have worked. You still could have got your scalp out of that, but you wouldn't have got any runner or anything. So I just don't. I think it's an aggressive trade because it's right in the middle of a range, and we're just kind of going sideways here. So it looks like we're starting to turn down, but we don't know that for sure yet. And of course, it does run on down. And then this turned out to, I hate having to work back and forth in and out here. But this turns out to be the very middle of the range. That was kind of the lows at the time. And notice how we pushed on through and we came back once, we came back twice. So you get a little double test there of that. And if you draw this trend line right off these lows and drag it up, it comes right back to it and turns down. It's a semi-decent bar. It's not a great bearish bar. It is bearish, but there's still a lot of tick. There's still three ticks or so there maybe, and you're basically getting a double test of this price level here, and it is off a trend line if you know how to find them off both sides. But it's not a great setup. So again, I only marked it green. You get a great signal bar here. It's only a first entry and it's right into the last low. but we're probably working down to the overnight lows on the range. So actually, right there is you wouldn't have known exactly. Actually, your overnight lows would have been much further down here at that point because we didn't move it up here till we got this high. So you still have a good bit. You still got room for here and here, but it's just the first entry. Actually, we were talking about this one. This one doesn't have much room. Still a lot of room down to here. It does confirm the trend line. It did go higher and turn down, so you might have trapped some people. So that's another one. You could really argue for that to be green as well. But notice how far away you are from the EMA too. So the further and further you get away, the more odds are you're going to come back. And notice we finally get a break and come back. And now we break that trend line. And again, it's just a first entry. It is a nice signal bar. You are looking for prices to retest this low and maybe test the overnight low, which is not, we don't know it's here yet. We're still thinking it's way on down lower. So that's another one you might take, but it's not a great entry. So again, I marked it green. And then we bounced here. We actually closed outside, bounced, and we really had an equal distance down if you measure these top two lines. So take the little measurement we used over here. And notice that there's your measured move. So we bounced right at that measured move. We didn't know we'd bounce there because the overnight lows were much lower, but there's a good chance of that. And that was based off of these lows here. And actually, I had this line a couple of maybe a tick or two lower then. And notice this thing went a tick or two lower as well. So it probably was a measured move to the tick based on the original measurements. I kind of adjusted it a tick or two as the day went on. But notice that we had our break, our new low. There's actually two swings down, and we reverse. That's a fairly bullish bar at that measured move way away from the EMA on a second entry. Technically, that's not a second entry because this doesn't make, yeah, actually it is. We did make a new swing high. So that's a second entry at a measured move. And that's a fairly bullish bar, but it's an inside bar to that one. So again, it's not a very good setup, although you can almost bet we're going back to the EMA there. It's another one you could argue for green. But just remember, green ones, you're going to have some losers when you take those. So just be prepared for that. But sometimes you catch important lows, and look how important that low was at the time, because now we're going all the way back to the top. And you don't get a lot of opportunities to enter it. Fortunately, on this one you do. Let me explain this one. Notice you move up, you pull back, you get a first entry, and you try to go, and look how you just went right through the EMA and then turned back down, then went on back through again, then pulled back. And it confirms that little trend line too that I drew off this side and drug over. And so now you got a failed second entry short. I've showed you a few of those yesterday at reversal points. Just go long right there, and that gets you in that trade. And you make a few more little pullbacks up through here, but you're getting too far away from the EMA, and then notice you come back again. And then I had a couple of people get mixed up on this one right here. Again, you can find this trend line off the top. I originally drew it a little higher. It probably is a little higher. But notice how we were turning back there, so I kind of adjusted it down. But I drew it off that eye and then drug it down here, just like I've been showing you. But notice it's just a two-legged correction. But let me show you something, because I had somebody ask me right here about the second entry long. Well, the second entry long from here is right here. Notice that new high, you pull back, first entry, and you turn back down again. If you'd kept going on up and not made an equal high or a lower high, that would just still be a first entry. But because of that matching 2-bar high, that's a new swing. So that's your second entry when it broke higher right there. And that's not a very good setup. So now you got a new swing high because it's higher than that matching 2-bar high. And you turn back down, and you get a first entry, and then you get a second entry long right off the trend line that you were betting on because you drew it off the other side or whatever. So I hope that's clear. And plus, if you draw this trend line down, you get the break and a move to a new low. But what you got here is you got one leg down, then a little two-legged correction, and generally the two-legged correction is the center of the pattern. And so look for a measured move, and you end up getting a two-legged correction here on this leg. This leg has two legs in it as well. This one only has one leg, then a little two leg, and then two legs in the second leg. So hopefully you can see there's the correction, and then there's your second leg, just like the market moves in twos, so remember that. So hopefully you can see that there. And there's actually a little zigzag. Yeah, but you can see it right there, and then another one. And notice here's something else interesting about this one. Notice if you measure this leg, notice where the measured move went to the tick right there. But guess what? We weren't back to the trend line yet. And so it made that one more little jog down before it shot up. And that's important that's an important piece of this whole thing. Hopefully you could see that. But you had a perfect little measured move right there. There's your first leg, then your two-leg correction, then a perfect, to the tick measured move right there to that bottom of that green bar. And then it tried to go up, but then it shot back down for just a second, just enough to stop out at least one person I know, because they were counting that as a second entry. And you could still count that as a second entry. Technically, you could still count that as a second entry. But it's really a second entry from here. And the reason it jogged back down is because prices were headed back to the trend line. So that's the point I'm trying to make there, is you weren't back to the key entry point, which it was hard to find because you don't have that's the first swing. But if you know how to find them off these highs, it's a little easier to find. So I hope that makes sense to people. But draw these short-term trend lines. You'll usually see me draw them all. Notice you're working up, you get a break, a few moves to a high, and then you correct. And then draw the one down. You're coming down, you get a close outside, you move to a new low, and then you turn up. You didn't get back to the trend line here, though. So there's no real good setup. That's not a real good bar either. It's not a real good signal bar. It's not bullish enough. And somebody else, I think, took that second entry right there. It would have worked, but it's not a great trade because it's not a perfect signal bar. It's there is one other way to look at this too, is that you've got at least a double test here, but you just don't get a very good signal bar. This one, it never breaks above it. We make this other one instead. So then you get this one, and it's not real great. It's fairly bullish, but it's still got a bunch, at least 3 or 4 ticks up there. So you might use it and count that as a double test. But with that being right in the middle, on the other side of the midline right here, I wouldn't take that trade because you may bounce into that. That's what it did. It went into the midline and tried to back up, but it ends up pushing on through. So another thing too, I would have measured this right here and looked for your measured move. And notice once we got there, we backed up again before it went higher again. But this thing was pretty strong by this point. Again, here it comes back to the midline, but just remember the midline is not very trustworthy unless it's been proven a few times. And notice that we pushed through it here. we pushed through it here even though we went higher. So we did bounce here. So the next time you might consider it if everything else looks okay, but I'll explain the rest of this when we get up here. So this is still not a very good entry. You could look at that as a little congestion and a little failed break lower. And as long as you got room to get out before here, you might take that. So once again, that's one you could argue for it to be green. But generally on that midline, I'm not going to use it even on a second entry until it's proven itself that it's holding a few times. So it held there. It pretty much held there, held here. So if it comes back again, hey, I'm going to pay more attention to it. But unfortunately, this time it way overshoots. Even if you put this back where I originally had it, you still got an overshoot right there. And that may be right. Just see how the middle. Yeah, I mean I probably had it right because now your midline fits even better. So yeah, maybe that's it. But anyway, you still get an overshoot. You come back first entry, then second entry. But again, not a very good signal bar. If you had one, it would have worked. But this one I might have taken. Here you don't really have much correction, and this one you probably would have, again, you would have played it more as a range. So there's not really a trend working down there. You do have a trend working down. Well, again, that's just a kind of a repeat pattern because, again, it's more of a, there's a little bit of a move down right there, but I would treat that more as a failed breakout. So that's like a repeat pattern. So if you had a decent signal bar, I may take that one. I didn't really look at it that way before, but it's possible. And actually, this just works on across here. You can see that. And you kind of bounce out of it and get back in and then go higher. So if this was the signal bar, but this one makes a higher high, so you really wouldn't want to go short anyway, but you could maybe since you're going sideways here, but I wouldn't go short there. But you did get an overshoot, so you're expecting prices to get a break soon. And notice it's not long after we break, and then you're running up, and you get a higher low right here. And I had somebody ask me about higher lows today or lower highs. And this would be one time where you might take one because this has been a pretty strong trend. We spent the whole last, really from 940 to 1030 in the upper half of that. That's pretty strong. So we're going to probably retest that high. And we're probably going to go up and try to retest the original high up here where I've got that line. And so a higher low right here would be your better bet than entering. If this had closed underneath the EMA, I'd be more hesitant because you don't want to go long right into that, but you'd be going long above that. And you can see it still came back, but you would have scalped out of that before it came back. So, and I don't think it really made a new low either. So, I still can't tell if it made a new low there. Maybe it did, maybe it didn't. Let's make this a little bigger. I'm just real curious. The low there's 83 and a quarter. 83.50. So it did make a new low. So yeah, if you had your stop one tick below that, you would have got stopped out. But it wouldn't have mattered because you'd have been scalped out of that long before it came back. So. And you might have even treated that like a failed second entry short with a higher double bottom there. But again, that's nothing. I mean, we're probably going up here. You may measure that. Where does that get you to? Exactly where we're looking. Plus that gets you a new high. We actually pushed a little above that. So that's, once again, but again, it's a very aggressive trade. It's not something. It's not a sure thing. But notice what happens. We run up here. We try to go higher once. We try to go higher twice. And this is just a little congestion. But the reason is because you got the resistance. And look how far away we are from the EMA. If we weren't way away from the EMA here, I'd never suggest that trade. And I wouldn't take it going short here, but when it broke higher and turned down and went out here, and if you got enough room to get out before here, because you may remember, I always tell you, these failed breakouts turn out to be important highs or lows. And guess what that was? That was a very important high. Look at it go. And you really just didn't get another opportunity to enter this. You're getting too far away from the EMA, even though you're getting setups off the key entry points. You know, if you want to be a little aggressive, you can take any of these bearish turns off of there. I wouldn't take this one because you just overshot it. So it won't be long till you get a break, and guess what? We get a break soon thereafter. But you really have a little double test here. You try to go higher once, twice. It's a second entry short. You got a nice bearish bar. It's the first break of that trend line. It's the first move back. You're going to at least test that low. So that's a nice setup. We finally get a decent setup. We are getting close to the low again, though, but it's still, I wouldn't be afraid to take that trade right there. And we work on down, and where do we bounce? Right where we did before. You get a higher low right here, still way away from the EMA. I like that one. To try to ride it back, and when it actually dips back there again, you get a failed second entry short. So when it broke higher, if you still got enough room to get out by here, jump in right there too. This one, we should have taken on off by that time, so I don't think I would enter there. It does kind of come back and confirm that little trend line right up through there. Then we're just working higher here. This, oops. This is a little higher up here. But notice that trend working up through there. You got a shorter term one right here. You do come back to this trend line right here and confirm it. It's a first entry. It is a little double bottom. You might look at it like a double test. If you do, you might take that trade. Here you just got to stay out unless you get a small bar way down here that's bullish enough to go long. And you do get a close outside. And but with this going higher, I wouldn't take a short in here, especially not into that trend line. But you do have a break and a new high in place, but you don't have two legs, and you're just kind of swinging. It's just, you're better off to stay out of this unless you get a long opportunity down here. Then it runs up, makes a lower high, but not a very good signal bar, and then gives you a failed second entry short, or long, I mean. And this broke higher, and when it went out the other side, you could have gone short right there. I wouldn't wait till down here to go short. You're expecting prices to at least come back to here. But, and maybe even down to here, but you didn't have this confirmed or anything yet. You could have drawn it off these highs and pulled it over here, but it's not really confirmed yet. So, this would have been your first target. Then if it fell through here, and then of course, if you got a good signal bar here, I wouldn't be averse to going long right there because you got enough room to get out between here and the high of the little range and the EMA. But you don't get a very good signal bar. Here you get a high or low, but now it's right into there and it's still closing below it. That's too risky. There's a failed second entry short here with a decent bar, but it's right into the resistance and you're way away from the EMA. So again, you don't want to be going long there. And finally, you come back, you get a first entry, you get a second entry, and this is one of those. This is a great example. We just came off the lows, went to the highs. So where are we probably going? We're probably going here. So you got to wait on something better than a second entry, even though that's a pretty good entry. But if you took that, you got stopped out. And if you take the next one, you get stopped out again. And then finally you get you break a little higher and get a little pull back on a after trying to go lower 3 times. So you get a little double test rule. Again, I marked it green because look how many times it's failed there. So finally you get a higher low that's breaking higher, and you get a good signal bar. I marked that one because by the time you've gone 1, 2, 3, 4, 5 times and you can't even close below that, you're probably going to go higher. Now, just like on the double test, you're probably going to go higher from there, but it did come back once again. It even comes back again, but that was the signal bar this time, and it's too bearish. Runs on up, come back, you get a second entry here, but not a very good bar. But you're coming back to the trend line most likely. So draw your trend line, notice the break, and you work back down, and you finally get there, and then it kind of bounces higher again. But just remember, even on a range day, when you get trend channels like this, when you come off the low, you're probably going to the high. When you come off the high, you're probably going to low. Sometimes you'll bounce in the middle, but you want to see that happen multiple times before you start to trust it. And you don't really have that here. Here you did. You started to bounce off of it a few times, but you didn't have that on the other one. Just like here, that was you weren't, if you continue to ride that down and kept bouncing off of it going lower, your trend's strong. Yeah, maybe you take a second entry then. So I hope this was helpful. I didn't talk about anything but trades today, and still took 40 minutes. I'm trying to shorten these videos, but I just can't seem to do it. We got another big bounce there in the after hours. Oh, that was one thing I wanted to tell you. Make sure that you don't use price action from the previous day. And when I say the previous day, I don't mean I'm including the after hour stuff. So today's price action would be anything that started at 3:30 yesterday through 3:30 today. That's what this line is. Actually 3:30 to 3:15. So that's where the cutoff is at 3:15. So anything that when it opens back up at 3:30, anything starting from that line over. So because somebody replied back that they were only using today's price action, but they weren't. They were starting at like 8:30 or something. So make sure you understand that. Just look at my notes real quick, and I think I've talked about everything I really wanted to talk about. But make sure you understand where we're starting at. So you want to use the 24-hour chart, and you want to start. It starts at 3:30. Even though we're not trading that, we still need it for our trend lines and so forth. So it would be starting at 3:30 from the previous day's close to the 3:15 close today. That's what these two lines are, right? That's where it closed at 3:15 yesterday, and this is where it closed at 3:15 today. So everything between those lines I'm counting and using as today's price action for my trend lines and so forth. So I hope that's clear. I'm going to wrap it up. We're done for the week. No chart lessons on Fridays. I'm going to probably take off early tomorrow. So probably won't answer a lot of emails after lunch tomorrow, but I'm trying to keep up. I'm getting a lot of emails. So I'm trying to keep up and trying to, still trying to give everybody as good an answer as I can without trying to shortchange you either. So just be patient with me. We got a lot of new people and so forth. So, but anyway, I'm going to wrap it up. We'll be back again to do it Monday. I'm done for today. I'm done for this week on the chart lessons. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.